The USDA Rural Development Loan is a great loan program that allows eligible buyers to purchase a home with 100% financing, aka no down payment. This is an awesome loan type that you as a home buyer may have an easier time using now that the market is calming down a little bit. So let's talk about what the USDA Rural Development Loan is and how you guys can take advantage of it. The first thing I want to talk about is what is the USDA loan, or the USDA Rural Development Loan Program. There are actually two different types of loans that I would say fall into this category. The first one is the Section 502 Guaranteed Loan Program. Now, this specific loan program is probably the most common. When you hear about someone using the USDA loan, I would say in most cases, this is what they are referring to. This program helps lenders make 100% financed, no money down mortgage loans to moderate income applicants. Now, there's a reason that I've highlighted moderate income here, and that is because we also have a second program. Now, for this one, this guaranteed loan program, you work with an approved lender rather than USDA directly. For the second type of loan they have, which is the 502 Direct Loan Program, this is directly through USDA. And the difference between the two is that the direct program is geared specifically to low and very low income applicants. In the description box to this video, I will have the income guidelines so you can see if you and your family fall into low, very low, or moderate, and that will help you figure out, if you're interested in using the USDA loan, which route to go in order to get it. The great thing about the USDA loan is that it is not limited to just first-time homebuyers. Even as a repeat buyer, if you have owned a home before, you can use this loan type. So this all may be sounding way too good to be true. You may be thinking, this is great. I would love to take advantage of it, but can I apply? Do I meet the criteria? So who can apply? Applicants must, 1, have a household income that does not exceed 115% of the median household income in the area where the house is located. There's two things I want to break down here. 1, for the means and purposes of this video, we're talking specifically about that guaranteed loan program. So I'm going through the criteria for what the moderate income would be. So you would not exceed 115% of the median household income in the area. That is going to be found in the link that I posted in the description box where I said like income limits. You can find that there. They want to use the median household income where the house is located. So for example, if I am living in another state, but I know I'm going to be buying a house in, let's say, Utah, and that house is in a qualifying area, and I want to use a USDA Rural Development Loan. They are going to use the area household income for that area, not where I am currently living. So that is a little distinguishment I wanted to make. You also must be willing to occupy the house that you're buying with this loan type as your primary residence. This cannot be used for investment properties or like second homes. You must be a U.S. citizen, U.S. non-citizen national, or qualified alien, be unable to get conventional financing with no private mortgage insurance. What does this mean in English? This means that you have to have and prove you have less than 20% down payment for a house. This USDA loan is specifically geared towards people who have less in savings, who have a harder time meeting the criteria that you may need to get a conventional mortgage, let's say. So if they, when you are getting pre-qualified, look at your bank statements and they see that you have more than 20% that you could put in savings towards a house, you are not going to qualify for this USDA loan. Just an FYI. And of course, this is government backed, so you cannot be suspended from participation in any type of federal programs if you are going to be approved for a USDA loan. So if you meet those criteria as an applicant, you're probably wondering, that's great, what can I buy? So the property must be located in a rural area. And for a USDA loan, that typically means that it either needs to sit outside of the city limits or it can be a city that has like population of less than 35,000 people. Of course, there is an interactive eligibility map that I will leave as well linked in the description box for this video so that you guys can put in specific addresses and see if where you are looking at buying will qualify and be an overall qualifying area. The property that you're thinking of buying with a USDA loan also needs to be a single family dwelling. Now they elaborate on this. So this can be an attached, detached, condominium, modular, and manufactured home. So what that means is that an attached home would be like a townhome or a condo where it is sold individually to you by the unit, but it may be attached to other units. So it's still a single family dwelling, even if it is attached to others. So that is allowed. Obviously, your detached standalone homes are allowed. Condominiums are allowed. Modular and manufactured homes, they can be permitted, but they do need to be on permanent foundations. They need to be permanently fixed to the land. They cannot just be temporary. Additionally, the house that you are looking at purchasing must meet HUD 4000.1 standards. These standards are what you would see for like an FHA loan as well. Usually VA loans follow these. They are certain health and safety standards that the house must meet. For example, usually they are wanting to see that the house has like functioning heat and air. They usually also want basic kitchen appliances. And if you want a full list, you can Google this to see what those standards are. Also, you can ask your lender. They're usually very familiar. But just know that the house has to be pretty move-in ready. Like, it doesn't have to be in updated condition, but houses where maybe the carpet's been pulled back aren't going to fly. The house needs to be ready for you to move in. It has to have floor coverings. It can't have chipped paint everywhere. It has to be in good, safe condition for you and your family. In addition, there is no maximum purchase price, which is exciting. The loans are generated based on the applicant's repayment ability. So they are going to look at your income, your debt to income ratio, and they are going to determine what your maximum purchase price is. Whether you want to go up to that maximum or not is completely up to you and your comfort zone. There's also no set acreage limits to using a USDA loan, but the acreage must be considered common for the area. So if this is sounding good so far, let's talk through the applicant qualifications. When it comes to income, they obviously recognize that people have different income streams. For non-self-employed individuals, they want to look at 1 year of work history. Now, this does not have to be work history from one singular job. As long as you have been gainfully employed for at least 1 year, even if you have switched jobs, that is okay. They just want to see that you have consistent income coming in month after month. For our self-employed individuals, it gets a little harder. They want to see 2 years of you being self-employed and filing taxes and tax returns on that self-employed income. So they are going to be a little bit more tricky to get through as a self-employed individual, but it is doable. With this being a 100% financing loan, you do not have to have a down payment, and there are no required reserves that you have to prove that you have in the bank. There's also no credit score requirement. Now, they do look at your credit. They will still pull your credit. What they do is they say you must demonstrate the ability to repay debts. Now, they say that lenders can assess alternative credit for applicants with no traditional credit. So if you have credit, you've established credit, even if it's not good, they are going to look at that. They're going to pull it, and that will affect whether you get approved for this loan type. But they are saying that if you do not have any traditional credit, you've never had a credit card, you've never had a car loan or a mortgage payment or anything that reports to your credit, you've never established it, they will be pressuring lenders to assess alternative credit for applicants with no traditional credit. So you could provide documentation that you pay utility bills on time, that you pay rent on time, and they will take that into consideration and can sometimes formulate a little credit score for you and still get you approved. Something big here with the USDA loan is that the monthly housing payment, like the amount you are paying for your mortgage, cannot exceed 29% of your gross monthly income. So however much you have coming in a month, without even taking into consideration your debts, figure out what 29% of that would be, and your housing payment cannot exceed that with this guaranteed loan program. They do make a statement saying that the monthly debt payments, including your mortgage payment, can exceed 41% of your gross monthly income. So this goes and ties into your debt to income ratio, where you have certain income coming in and you have certain debt payments that you have to pay out on your car loan, your student loan, your credit cards, things like that. They're saying that all of those debt payments plus your mortgage payment, in this case, can exceed 41% of that gross monthly income. They make that distinguishing statement because for certain loan types, 41% is the cutoff. So with the USDA loan, they do let you take on a little bit more debt than some other loan types do. So if you have less in overall savings and you don't mind living in a less populated city or a rural area, this USDA loan program could be a great way for you to get in a house and start building up equity quicker. Now, you do have some additional options with this. Obviously, we talked about in this video, the Section 502 Guaranteed Loan Program. You also have, like I said, that direct loan program. If you look at that income sheet, which is linked in the description box, and you see that you fall into the very low income category, it would be in your best interest to go ahead and reach out to USDA directly to try and get assistance with a mortgage in that case, because lenders are going to be more able to help the people who are in that low to moderate income range, whereas USDA is specifically setting out to help that very low income bracket. Now, in addition to these two options, there is a third option, which is the USDA Construction to Permanent Loan Program. This is for those of you who may be interested in buying a house that needs a little bit of renovation and financing repairs into that purchase. Or you may be interested in building a house in a rural area and want to get one loan program to buy the land and finance the construction materials for your build all in one loan. If you have questions on any of these three loan programs, let me know. I will make another video diving into the specifics of these if you ask for it. So let me know in the comments below. My Instagram DMs are always open. If you have a question specifically about how this can apply to you or where to find resources, let me know. Follow me on Instagram and shoot me a message over there. I'm Nicole Nark, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.